Will Bitcoin continue to rise? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. So go ahead and click the link below. After completing KYC and depositing $100, you will receive a Bitcoin contract position worth $1,000 directly. What does this mean? By clicking the link below and depositing $100 after KYC verification, you can choose whether you want to receive a long or short position, which will be set up immediately. You don't have to wait for the end of the promotion or go through any approval process like other events. You don't have to. With a $100 deposit, you can enjoy a $1,000 worth of Bitcoin position. If Bitcoin moves in the direction that favors your position by just 10%, you will already double your investment. At that point, you can withdraw your funds. Now let's get back to Bitcoin. Alright, Bitcoin. Let's start with the daily chart. On the daily chart, there's a simple and easy to understand indicator called the moving average, MA. Currently, you can see that the MA is gradually converging. After the convergence, if the price continues to stay below the moving average, the price action will slowly transition from a bullish arrangement to a bearish one. What does this mean? So, if the candlesticks continue to stay below the moving average, it's the EMA, the exponential moving average ribbon, after all. The EMA is a very sensitive type of moving average. It will immediately turn downward as long as the price stays below it. And it turns very quickly because it is weighted, giving more importance to recent periods and less importance to distant ones. So, if the price continues to stay below this line, around 27,000 to 28,000, the price will enter a bearish arrangement. In this bearish arrangement, the bullish trend on the daily chart level will no longer be visible in terms of MA. In fact, if we analyze it using the Dow theory, we can see that the bullish phase has already been exhausted in this oscillation range. And, as you can see, a bearish structure has emerged. If the moving average confirms the bearish structure, it will definitely add to the downside pressure. Let's also take a look at other important aspects. Now, let's zoom in and switch to the 4-hour time frame. On the 4-hour chart, you can observe this. If we mark this level, it would be approximately here. The entire range of support and resistance we're discussing is not a single line, but rather a range. Simplifying it as a single line is just for illustration purposes. Within this range, there is a gap of around $150 to $200. This range plays a perfect role in terms of support and resistance. For example, a support here, another support here, and then it becomes resistance here at the same range. In order for the market to consider a bullish scenario, the price needs to break through this range and stay above it. Currently, it's still below this white range. I believe any bullish scenario should not be considered until the price firmly establishes itself within this white range. Only then can we explore various bullish possibilities. Although I personally anticipate a bullish scenario, as going long tends to be more profitable with faster price increases. Trading during a downtrend can be challenging due to a gradual price drop. Additionally, spot trading allows for capturing price increases and generating profits. Therefore, trading becomes particularly favorable in a bullish market and more challenging in a bearish market. While I hope for a bullish trend, we must respect the market conditions. We notice there's a small retracement at this level. You'll realize that if we want a bullish scenario in the 4-hour time frame, the price movement needs to establish at least one bullish structure. This means it needs to break above the previous high and form a structure similar to this. Only then can we say that the probability of moving toward a bullish trend increases. Note that this retracement yesterday came down to the 0.618 level. Zooming out, you'll notice that after the upward movement from here, the price had a retracement that perfectly landed around the 0.618 level. After touching the 0.618 level, the market continued to move upward. But it went up. Okay. It rebounded after hitting 0.618. Judging from the bounce and the magnitude of the retracement, if the market is going to be bullish, this will be the first wave of a potential uptrend. The initial retracement reached the 0.618 level, which is unlikely. Well, it's not entirely out of the question. It's possible that it will be bullish. However, considering various factors, the current market conditions are more favorable for bearish trends compared to bullish ones. Based on the current price movement, the retracement's magnitude is relatively large for the first wave. Looking back at historical examples, based on technical analysis, when a trend has the potential to go further, the retracement in the early stages tends to be less significant. We have many examples of this. For example, let's take a look at this specific case. Let's take this as an example. This represents the first wave of a pullback, right? How large was the magnitude of this pullback? Of course, the time frame is different. We were just looking at the 4-hour chart. But now we're looking at the daily chart. The time frame is different. But the concept applies. You can see that the price went upward. All the way. After the retracement for the first wave. It'd have been a pleasant experience if you had held a long position with spots during that period. The retracement reached the 0.382 level. And then the market continued to move upward. Therefore, we can observe that when the first wave retracement is small, it often indicates a potentially more extensive uptrend. Now, let's examine the previous section. What can you notice about this position? The retracement for the first wave reached the 0.236 level. And then the price continued to move upward. The rise occurred after reaching the 0.236 level. This wave can also be considered a successful and bullish move, with relatively shallow retracements, especially during the initial retracement. Let's look at the previous major bull run. During the major bull run, as you can see, starting from this point and pulling up, where did the price hit? On its first retracement? It's 0.382, which can be considered a weak pullback. The magnitude of the pullback is not significant, similar to the current market. On the 4-hour time frame, the first retracement landed on 0.618. However, the 0.618 level is not really that bad. If it were an uptrend and a potential sustainable upward trend, a 0.618 retracement would be more appropriate in the later stages of the price movement. Starting with a 0.618 retracement is not entirely unfavorable, but it is not ideal. Here, you can observe this retracement is a 0.618 retracement. However, it appeared toward the end of the market trend, not at the beginning. Now, the price action is experiencing a 0.618 retracement right from the start, which is not considered really good news for the bulls. Nonetheless, there is still some opportunity. Okay. From this perspective, we can make some judgments. Furthermore, if it continues with a bullish trend, we will definitely see a price action breaking above the trend line. As you can see, we have a touch point here, followed by a second touch point. After the subsequent decline, if the price is to go bullish, we will certainly see a breakout. After the breakout, there might be a pullback and then a continuation to the upside. However, it is also possible to skip the pullback. So what we're waiting for now is, this drawing is exaggerated. Drawing this looks more reasonable. So, the best entry opportunity we are waiting for is to enter when the breakout occurs. Entering when the breakout occurs would be the clear and safe way to enter. Moreover, if the market continues with a bullish trend, we will definitely see a breakout above this trend line. Although this potential trend line is only based on 2 points, I believe it would be an excellent entry point when the breakout occurs. Alright. We can review the price movement. In the past, this position was an excellent entry point. You might wonder why you should wait until then to enter the market. Why not now? Well, there is indeed a significant gap between the current price and that position. However, from a risk perspective, being in a higher position offers better safety compared to being in a lower position. In fact, given the current market conditions, it is more advantageous for the bears or sellers. Analyzing various scenarios, it appears that the bears have the upper hand. Therefore, it is preferable to wait for a safer opportunity before entering the market. Let's look at the previous position. Okay? Here, when there is a breakthrough above that level, it's an excellent entry point. We can look further back and find another example. We don't have the pattern here. Similarly, in cases like the previous one, when there is a breakthrough, it is a suitable entry point. When the price breaks through here, we can enter the market with a position. And then, if we look at this previous position, there is another example. Here, once it breaks out, it's a clear signal to enter the market. Here. So, we should wait for the action of breaking through the trend line. Currently, the bullish scenario is not yet highly favorable. The only advantage is the price itself. If I were to enter now, the price would indeed be at a relatively low position, in case there is a bullish trend ahead. However, I believe the level of safety is still insufficient. If one were to enter, it would be primarily with spot positions. Nevertheless, regardless of the situation, we still need to see the price hold steady above around 27,400, with candlesticks staying on the level. Only then should we consider further action. Alright, thank you. You're welcome. To like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye bye.